And we are live, Dustin.
Hello, hello.
We've survived another episode.
Yes, we did.
Let's
Yes, we did.
jump right into it. Markets just closed. NVIDIA is going to be closed or reporting quarterly earnings. Everyone's waiting for that. And we'll try to cover it as soon as we have availability on that. I believe the time for that is in about 20 minutes. So we'll jump to that as soon as we have it. But Dustin, what else we got?
I mean, it's a very big week this week. I finally made it into the thumbnail. So that's what I've been waiting for. But if you want to skip that and go right into the markets.
What did your mom think about that?
Oh my God, she was over the moon.
Oh,
She's been complaining every week to me. Why is it just Hamid?
oh no.
You should be on there. I'm like, it's not about me, Mom. I'm not
That's
the
so funny.
star.
That's awesome.
But she
Well,
was very excited.
did you tell her you didn't have to ask or anything? Or
I don't know if I gave her I definitely didn't tell her I pushed for it.
okay, I
Yeah,
mean it makes it extra special that way.
right. Yeah, I earned my place.
Well, before we start, we have a listener, and I'm assuming she means about NVIDIA, but she says she's stressed.
Yes.
So,
I
Don't be
think a lot of
stressed.
people are stressed, especially if they own NVIDIA stock, but also NVIDIA is going to probably affect a bunch of other companies as well. Everyone in AI, which is basically all the sort of big names right now, Tesla, Meta, Microsoft, Google, Apple. So yeah, there's probably going to be a little bit of hit on the market if NVIDIA misses, but I just don't see a scenario in which NVIDIA misses, at least in any kind of substantial way,
The other
especially because
the other
of the
factor is the
China tariff.
guidance.
Yes, that is a
Because
big factor.
last quarter their guidance was negative, and the estimate is that this quarter their guidance will be negative as well.
And by negative, you just mean less than what had previously been anticipated, but significantly greater than their previous quarter's revenue still. We got to put that in perspective because negative is all, like their revenue
Right.
is not going down.
No, the revenue's going up. It's just not going up as much as analysts want it to, or at least that's what we're expecting. Who knows? We'll find out in like 15 minutes.
Yeah. And part of the whole thing is just like what is the what is the analyst expectations or whisper numbers? So I think they're going to beat, and then I think they're going to probably guide up because of the China tariff restriction removal or for the H20 chip for NVIDIA. But the question is. Are people expecting an even bigger beat and guide up as a result of those things? So we'll see. We'll see.
Right. Yeah. It's always hard to guess, especially with NVIDIA.
I'm done with this sort of like guessing game in terms of like the short term as to what the market is going to try to do. I tried that a little bit in my 20s, but I had zero luck. But anyway, what do we have, Dustin? Let's jump into it.
Well, we also have CrowdStrike and Snowflake reporting. Those are supposed to report at 4:05, so any minute now.
All right, we got
any thoughts on those companies that you want to share?
I don't personally own any of them, so it looks like we're starting to get some reports in Earnings Hub. Yeah, but no, I don't have any strong opinions. MongoDB reported yesterday, by the way, and they
they were up like
killed it.
30%, right?
Yeah, what did they end the day at today? Yeah, holy cow, up 37%.
Crazy.
They crushed their estimates though. Like look at this. So they were estimated to have 552 million in revenue. They came in at 590, and then they wow, their EPS, they just crushed the EPS. 14-cent expectation, they crushed it with $1 of EPS, a 600% beat on EPS. So
and positive guidance.
And positive guidance. That's right. That's right. So if we, where's our guidance report here? So yeah, the expected revenue for next quarter was 552. They increased it to 582 to 592. And usually they're going to beat even this number. So yeah, this is what's how Wall Street rewards excellence and punishes, like mediocre or like barely meeting expectations. MongoDB just crushed it. It's a great company. I actually used to be a customer of this company, so we were super happy as customers at GitKraken, which used MongoDB in the background. So I'm not surprised as to why they're just crushing it and beating expectations. But look at these numbers.
MongoDB is huge. I've never worked at a company that's actually used them. It's good to hear you've had a positive experience.
Yeah. Look at this revenue growth graph, by the way. This is another one of those where it's like
it's like Monday.com.
Yeah, exactly. Okay, so let's see. Have we gotten any interesting reports in yet? Who's ANF? Is that a company you know? Abercrombie and Fitch. Okay, so Abercrombie, was that on the docket for discussion?
Yeah, that's on the docket. Yeah.
Why did you want to bring it up, Dustin?
Well, I thought we would do another fun Would You Rather with Abercrombie versus Gap, because I think that went over well last episode, and those are two very similar brands. And now you have a little bit of exposure into the retail space with American Eagle. So because you have
look at these numbers, they look so good. 5.1 billion in revenue, 4.5 billion market cap. So price sales ratio is 0.9, price earnings ratio under 10. They're pumping out almost $10 worth of EPS, like earnings per share, and their revenue is growing. So this
and they're down 42% this year.
Why is this so cheap? Like, what's
I think
the
because
reason?
people are afraid, because it had such a big run up. If you go to the 5-year chart, I think people are afraid because it shot up so much, and now it's like, do I want to get back into this, or do I want to get into this at all?
Right.
Kind of similar to an SMCI situation, in my opinion.
So what do we have with? Oh wow, Gap is also like very cheap on a PE/PS ratio basis, but it's not growing nearly as fast. So that's interesting. But both companies have a PE less than 10. And then what does American Eagle? Just under 12, despite being up 8.5% today. American Eagle just announced their campaign with who's the new guy?
Travis Kelce.
Yeah, thank you. So,
or should I say, Taylor Swift's fiance?
He's
that's how people really
better
know
known as.
Yeah, better known as.
Which is kind of an interesting person to use. And by the way, American Eagle shirt here. I went there yesterday to check out the store for the first time ever after becoming a shareholder. I thought they had good stuff. I mean, and very inexpensive relative to where I normally shop. So I was like, this t-shirt was like $12. I was like, wow, there's still t-shirts that are selling for $12. So I was very pleasantly surprised. But okay, so American Eagle versus Gap versus Abercrombie. So Abercrombie, on the numbers basis, historical numbers basis, has the best of the group. So what was their ticker? Abercrombie.
ANF.
ANF. Thank you.
Yeah, and ANF. Just to be clear, ANF reported this morning. Gap reports tomorrow afternoon.
Okay. And ANF, despite reporting this morning, is down 1.3%. So that people must have expected even more. But just based on the numbers alone, ANF looks like the better investment, right? So it has like a better, it has basically the same PE ratio as Gap, but its revenues are growing at roughly 9%. Not knowing anything else, if I was just looking at the numbers, ANF seems like the better buy. But American Eagle has a lot of sort of controversy and this new ad campaigns going for it. So in retail, the swings can be very, very quick and can impact these numbers pretty significantly. So I think that American Eagle for me is the more interesting buy. But I've been thinking about American Eagle over the past few weeks since I've bought it, and I'm surprised they haven't like totally doubled down on the controversy. They haven't like kept the conversation going about it. So I don't know. I'm like not super excited about it. It will. I'm obviously going to wait until their quarterly report comes out next week, which I believe they're scheduled to report on Wednesday of next week. But I don't know how long of an investment this is going to be for me.
Right.
So,
Which was my inkling since the beginning. But I'm
yeah,
not going
that
to
it
say
might
I'm
be
not going to
short
say I
term.
told you so until it happens.
You're probably
And I
right.
know you'll hold it just so I can't say I told you so. But do you think if they were to release an ad tomorrow that was a little,
More
punchy,
edgy.
yeah, would that kind of turn things around for you? Or
Maybe. I
so
want to
there's still
see
time?
what happened. Actually, I'm going to be like obviously very paying very close attention to their earnings report next week. So that'll like largely determine whether or not I become a long-term investor in it, or if I end up deciding to sell.
Got
Not so much what the stock does after. What the stock does after is sort of like irrelevant to me. Like it could go up, it could go down, but if I'm like uninterested, then like I'll pass on it.
Right.
That happened for me with why am I drawing a blank? What's that food company that we talked
Kava.
about? Kava, yeah.
Yeah.
So the stock went up and I was still uninterested,
Right.
But anyway, all right. Who else has reported?
HP reported.
Oh, Snow has reported
Snowflake
as well.
reported. Yeah, that just came through. Snowflake positive EPS, and there was an
35
expectation of
cents.
negative. Yeah.
Wow, look at that.
And they're up
And they're
12%.
shooting up after
Yeah.
hours. That is huge.
Snowflake is one that I used to own and got impatient.
Oh, really?
Yeah, I was trying a different strategy where I was kind of looking at what some of our more popular portfolio owners on Savvy Trader, what they were invested, like what all
Right.
of them were invested in, and everyone was in Snowflake, and I was like, probably a good investment. And sure enough, it seems like it was, but
Right.
I didn't experience that upside.
But okay, let's compare Snowflake with MongoDB. Like these numbers
Great.
here are like we're having 4 billion in revenue, 66 billion market cap, 28%
Maybe
revenue growth.
click on the EHS so we could see it visually.
Okay, so hold on. Their PE is 183, but that's because they're just barely becoming profitable. So like not super important. Price sales is 16. That's pretty high price sales ratio because it is a pretty mature company growing at roughly 28%. It's not like it's all of a sudden magically going to start, growing at 100% or something. And then its EPS growth is obviously just now becoming profitable. So this is like, the trailing 12 months being plus 18%. I'm surprised that's a D actually. Oh, wait, it actually shows it as
Hamid,
I
are you
wonder if
showing
this
the right
D is
tab?
not updated.
Oh,
Am
now
I?
it updated. That was weird.
Wait.
Disregard.
But anyway, so their EPS growth is 18% and revenue growth is 28%. Now, if we look at this for MongoDB, so that's MongoDB, MDB, they actually have a much better price sales ratio of 7.9. Similar revenue growth, 22% versus 28, and much better EPS growth of 47%. So, MongoDB might be a little bit less expensive, but like Snow is obviously growing very, very rapidly as well. And there's a question as to which one of these companies might be more disrupted by AI as well, which I have no idea which one is more likely to be disrupted, if either one of them, for that matter. Any thoughts, Dustin?
This might be a dumb question. The business is essentially just storing a lot of data, right?
Well,
Like,
which one? MongoDB?
Both.
I don't know
That's what Snowflake does as well. And then there's things that they do on top of that.
Yes, I know MongoDB is mostly a database
Right.
company.
The DB in the
Yeah,
Mongo.
that gave it away. But with Snowflake, I thought that they were a business logic layer to try to understand your data. Like
I think they do that as well.
okay.
You know, you might be right, but maybe they aren't solely, or maybe they don't do the database side of things, and it's just the layer on top.
But I suspect they're probably making AI offerings already. Both companies are probably doing that. I can't imagine them not doing that.
Yeah. Okay. Yeah. It sounds like you're right. I'm looking at their description. Yeah. Consolidates data hosted on different public clouds for centralized analytics and governance. But
CrowdStrike. Go ahead.
did CrowdStrike just report?
They have already reported like 120% beat on EPS and 1% beat on earnings, but stock is down almost 8% after hours. So not, it's like apparently despite the double beat, not apparently a big enough beat from what the market was hoping.
Right.
And this is where you know, like you never know what's going to happen. Like I've stopped trying to speculate on the short term because you know, when the company is doing really well, I stick with the company is how it goes.
Yeah. CrowdStrike's another one that's very popular on Savvy Trader. See a lot of people own it.
It's the 20th most highest ranked company on Earnings Hub. Yeah.
Yeah. And NVIDIA is number 1, and they should be reporting any minute.
Yeah. Okay. Any other?
Yeah, another stock I wanted to talk about. They didn't report yet, but they report on Friday, and they are ranked number 31 on Earnings Hub is Alibaba.
Oh, I have like zero interest in Alibaba.
But
I'll tell you why.
And I think that's interesting. That's why I wanted to bring it up.
Okay, I'll tell you why. When Alibaba went public, it obviously, you know, was like big news, and that's the time that I looked into it, and I forget how many years it was. And it turns out, like at that time, and things may have changed, so you know, double check everything that I'm saying. But if I remember correctly, nobody outside of China, Chinese people can own Chinese companies. So that's like a given fact that like China does not allow ownership of their companies by outsiders. So as Americans, we can't own any piece of Alibaba. So the way in which Alibaba has gone public in the United States is by creating some Cayman company that is sort of like a shadow reflection of the Chinese company, and its stock price basically sort of reflects the Chinese version of it. But you don't actually own any piece of it. I don't believe there's any voting rights. There's like, it's not the traditional stock in the company that you're buying. It's some like basically derivative of something that is a Cayman Islands based company that you're buying, if I'm not mistaken. And things may have changed, but that just completely turned me off. I'm like, why would I want to own Alibaba when I can buy like American companies? At least I have like some connection with them. I can vote my shares. The shares are like a piece of the company. So, you know, like there's this sort of like fundamental reflection of what it means to own a piece of the company. So I have zero interest in Alibaba. But how did they do?
Well, they didn't report yet. They report on Friday.
Oh, okay.
Yeah.
This coming Friday. Gotcha.
Yeah, this coming Friday. So are you interested in any companies that are outside the US, or do you strictly stick to US companies?
Well, okay. So Rocket Lab is a great example of a non-US company that I do own. And
They
it just became
switched, right? Yeah.
but I owned them while they were a New Zealand-based company. But at least a New Zealand-based company being traded on the US stock market is very, very similar to a US company being traded on the
Right.
US stock market.
It wasn't OTC.
Well, not that Alibaba is not OTC either, but it's not some derivative that, you know, like you're
Right.
actually owning shares and you're sort of voting, and you know, you have similar rights, if you will. With the Cayman Island shadow company that like reflects the stock price of Alibaba. I have no idea what rights you have. It was just like this long 100-page disclosure that I was not interested in reading details of, so I passed on that. But yeah, Rocket Lab is New Zealand based technically, but now they've switched over to become an American company, and now they're like qualify for military contracts as well, or have better qualifications for military contracts. They have US based operations. I mean, this is like a totally different company than something that's Chinese based. So
Right.
let me jump in here real quick. Saeed, one of our listeners, is asking, CrowdStrike dropped. What's the reason for it? And this is the thing. Despite having a double beat, CrowdStrike, this is what we're talking about. CrowdStrike had a double beat. If the expectations of the market is such that they should beat by more, then you never know what the real expectations are, like the whisper numbers, as they say. There's no way to sort of like know for sure. You could actually have the stock still drop despite having a good quarter. So speculation in the short term is really, really difficult.
Right. There's also the element of like what's actually discussed during the earnings call, and I doubt their earnings call actually started yet, but that could also move, in the positive or negative direction, depending on what's said.
Yeah, that's exactly right. All right. Do we have NVIDIA's numbers yet?
I don't think so. Not yet. At least I'm not seeing it on my end.
Should we talk about other stuff while we're waiting on NVIDIA?
Let's pivot to talking about your portfolio, because you made a very big move. Because typically what I've seen from you is like you'll do like a fairly large initial investment into a stock, and then after that you'll just kind of like chip at it and like do like a little like increases every once in a while. But I think you did like a 43% increase in Rivian.
On Rivian, yeah.
So what's going on with that?
So actually, I've learned to kind of like build up my positions over time slowly, because oftentimes the stock, when I get excited about it, is because it's probably dropped to some extent, and at least it's a really good price and it hasn't moved substantially. So I've learned in those kind of scenarios, the stock is likely to drop even more in the near term. So most of the time I'm buying slowly, and in Rivian's case, that has been true. I built up my Rivian position over the past couple of years, and it's basically been like flat to down most of that time. And
I feel like there are times there that you've kind of fallen out of love with it a little bit. Like,
well, I've been frustrated at the I've owned it for a couple of years. I was frustrated at the rate of progress on getting to positive margins on the vehicle. So before, when they were selling a vehicle, they were actually spending more on a per vehicle basis than the average sale price. And they have fixed that for the most part, assuming they can build the vehicles in enough volume, which they didn't do this last quarter. So there's been definitely some frustration there with Rivian. But one of the things that they have also been investing in for over a year is their AI and autonomy. And I watched an interview with RJ on Friday that Inside EV did with him. And the interview is packed with like great info, which if you're a Rivian stock owner, you should probably watch that video. It's about an hour and a half long. And it builds a lot of confidence in the company. By the viewer gets a lot of confidence in the company just listening to RJ talk about the various different elements, including the R2. But one of the things that I started to think about was his discussion about their AI and autonomy investment, and how he fully expects them to have point-to-point hands-off driving. And essentially what point-to-point hands-off driving is the equivalent of what Tesla full self-driving has today. You still need eyes on the road, but you can have hands off the wheel. And
did they acquire a company to do this, or are they building this like from scratch?
I believe they're building it from scratch, and they have been at it for quite some time. So this is not something new. In fact, they in the latest iteration of their R1 vehicles, the second generation R1, not to be confused with the R2.
R1.1.
Yeah, whatever. they put in these ECU, these computers, self-driving computers in them that are more powerful than Tesla hardware 3 computers. So at the time, Tesla hardware 3 was what was the latest, and these computers are roughly 1.5 times the power of the Tesla hardware 3 computers, and they use 2 NVIDIA chips for it. They have a lot of compute power on every vehicle, and they designed that circuitry and computer system themselves. So they've been working on this stuff for some time. And RJ kind of tends to be way less, optimistic with his timelines than, let's say, Elon is. It's tough to sort of like nail these timelines down. So I totally understand if they're going to be late or whatever, but it's not like, he hasn't been promising it for 8 years and not delivering. He just basically started talking about point-to-point hands-free driving just relatively recently, and they're going to have an AI autonomy day in December. So my thinking process is that if they can convince and demonstrate that they are close to having point-to-point hands-off driving, which is the equivalent of what full self-driving on Teslas are today. And if they can have that within the next year, Rivian could get repriced as an AI autonomy company, right? And if they get repriced as an AI autonomy company, and there could be belief that they could even build their own robotaxis someday, not next year, but possibly 2-3 years down the road, then all of a sudden you have Rivian being the potentially third player, a very viable player in this space, Waymo, Tesla, and Rivian. And if that happens in the investor mindset, investors either reward or punish, meaning like there's no sort of in between. If they start rewarding in anticipation of this type of thing happening for Rivian could get repriced to $100 billion company relatively quickly, right? That's a definite possibility.
And where's it at today? Do you know?
It's roughly a $16 billion company, right? So that's, approximately a 6-time increase if it hits 100. I mean,
Non-investment advice.
That's right. This is all speculations and opinions, and we have lots of them. And
just two friends talking casually.
That's right. But like, and 100 billion is not sort of some magical sort of number that it would necessarily stop at, because Waymo is estimated to be valued 200 to 300 billion. In my view, if Rivian could actually show that they are capable of autonomy, they should be worth way more than Waymo, because Waymo does not have the vehicle advantage, meaning they don't make their own vehicles. Their cost per vehicle is way too high. Rivian is taking the approach of similar to Tesla's, but they're also including LiDAR and radar on there.
That was going to be my next question. So Rivian does have LiDAR.
That's right. So they have five LiDAR and radar devices on the vehicles as well. So
what are your personal thoughts on that? What are your thoughts on, like, do you think LiDAR is needed? Do you think there's benefit? Do you think it's better to not have it and keep it cheaper?
Yeah. So I think that, from a cost standpoint, I've been, before they used to cost a lot. Like, I've been very negative on them. And then, when you take the V1 approach of building these self-driving capabilities, which was all rules-based, there could be a lot of problems with that approach and having two different signals, meaning if the video cameras are telling you one thing, but then the LiDAR is telling you another thing. If you're taking the rules-based approach, then like, what do you do? Mm-hmm. And I think Elon is right about that, because he made the decision of dropping LiDAR when he was approaching self-driving and under the V1 approach, which was the rules-based approach. But with the V2 approach, it's a little bit different, meaning like you can feed all the data that you're getting, all the signals, the cameras, the video, the LiDAR, the radar, all of it into AI and say, this is how a good driver is driving based on all of these signals, right? And that's how AI learns. So if you have more input to AI, all indications are that that's a good thing, not necessarily a bad thing. So Elon might be wrong about that. And part of his resistance might be the fact that if he admits that, okay, LiDAR, radar could be a good thing, then all of a sudden, 100% of all of the existing Teslas that don't have that vehicle on those vehicles are completely pointless, and they cannot even be used for data collection. So so it's possible that it would put Tesla way behind on the data collection side of doing AI. So I could see why Elon is double downing on the camera only based approach, because A, he doesn't have LiDAR radar on his vehicles, and B, he's kind of like, we got to figure this out with video only, because that's how humans drive. But technically speaking, the V2 approach is take all the sensory info, throw it at neural nets, and tell neural nets this is how a good driver drives with all this sensory info, and figure it out, right? And AI figures it out. And in that scenario, Rivian might actually be at an advantage.
It makes sense to me. It's how humans work, right? Like we have our 5 senses. Like either I see I'm about to walk into a wall, or like I kind of hear a difference of like the noises, and that kind of stops me or whatever.
Right.
Or you feel it and you kind of slow it down before you make real impact, right?
That's exactly right. And they call that intuition, right? Like intuitively, you knew something was wrong. And AI is really good at figuring out that intuition, essentially, when you give it enough data. So in the V2 approach, so to be clear, my position was very much in line with Elon's, in that, like, hey, you can't have 2 sensors telling you to do 2 different things in the rules-based approach, right? So I was 100% on board with Elon's way, but now I'm like, more data is not necessarily a bad thing when it comes to AI approach. So this is a little bit different.
And what about your experience with FSD with your Tesla? Like, have you experienced like heavy rain or low lighting conditions where the cameras aren't working, or has it been pretty seamless?
No, in those scenarios, you do have to sort of take charge. I mean, it's actually surprising how well it works, even in rain, or light rain, I should say. But there are times when you do have to take over, and it still makes mistakes. That, like every now and then it'll make a left turn from the second lane into the first lane, and fortunately, it only makes those mistakes when there's no cars there. But then you're like, wait, why is it making such a basic mistake? And on like certain turns, it does it every single time. So
well, the concern there is if they actually do robo taxis where no one's behind the wheel, is that viable?
Right? Well, a lot of these mistakes. So, for example, if there's no car there and it's like crossing the lanes or whatever, like, is it a big deal, right? Like, it's probably not going to get into a bad accident just because of those little mistakes. But it is surprising that it makes those mistakes in the first place. I'm not sure LiDAR would prevent that anyway, because LiDAR is not necessarily, like, lane detection is a very good visual thing from a technology standpoint. So,
right, you need the cameras for that. I don't think LiDAR
would help in that scenario. Yeah, but so like they just have probably more training work and just regular incremental update work to do to get to full blown robotaxis. But they're like serving robotaxis in various different areas. So I suspect that version that they're using is ahead of the version that I'm using in my car. But it is impressive. What Tesla has done is unequivocally incredibly impressive. And if Rivian is second or third behind them, then Rivian cannot be a $16 billion company. That's just it just does not make any sense, right? So that's what I got excited about over the weekend, and why I increased my position by 43%.
It's funny to hear you speak so positively on Tesla, because I saw you posted your Rivian thoughts on X or Twitter. It got like over 100,000 views. A lot of people commented, and for somehow, some way, Twitter makes things seem very black and white, and a lot of people
think that I'm an idiot.
Like, I don't. Yes.
Yeah, and almost 100% of those people are Tesla fans, or they're anti both Tesla and like EVs and Rivian, and like they think self-driving will never be a thing. So there's only those like 2 groups that are negative on my post. And what's funny is that I'm extremely bullish, and I've been an extreme fan of Tesla for the past 10 years roughly.
And Tesla
When I
owner.
pre-ordered my Model X, and I've like had owned 3 different Model X's, currently own a Cybertruck. So I'm a huge Tesla fan. I think Tesla is going to be the world's largest company. In fact, I predicted that many years ago. Like, I created a video about it, which I had to sort of post recently, just to say, like, listen guys, I get that Tesla is ahead of Rivian and is almost figured this thing out, and is going to be number one. And I think, by the way, the reason I sold my Uber shares is because I think Tesla is going to destroy Uber over time as well. But when you look at the sort of opportunity here of robotaxis, I think some of that is a little bit overestimated. But it's not going to happen overnight. And like, when you look at all of Uber's revenue is like roughly Uber's pulling in, I think, somewhere in the neighborhood of 120, 130 billion dollars of gross revenue from the millions and millions of vehicles around the world that they have with drivers in them. Basically, they're ubiquitous. They're everywhere. So what's this sort of potential revenue opportunity for robotaxis? It's not like going to be significantly greater than that, and it's certainly not going to get there overnight. And despite having all of that revenue, if you sort of replace all of that revenue with robotaxis at, let's say, half the price, because you can't charge just as much, otherwise, like, people might choose driver-based cars as opposed to the robotaxis. Just part of the advantage is to make them cheaper and safer. Then like, how much is that worth? And that's going to take a good 10 years before we get there, right? So in the next couple of years, how much revenue is Tesla going to have from robotaxis? At the most, it's going to be single-digit billions. Maybe 1 billion, 2 billion, even 5 billion would be incredibly impressive. But 5 billion added to Tesla's revenue of $100 billion is only 5% increase. Even if they have $10 billion of revenue from it in the next 3 years, 4 years, that's only a 10% increase. So the movement for Tesla's revenues and profits is relatively small. Now, if Rivian just simply gets considered as a potential player in this space, it could move in a substantial way. So from an investment standpoint, that's how I'm looking at it. That yes, Tesla is number one. I don't argue about that. There's no question in my mind that they're number one, or will be. Waymo is technically number one right now, but I think Tesla is going to overtake them. But what is the number 2 and number 3 worth? And if Tesla's value of $1 trillion value is like $400 billion of that is based on robotaxis alone, then number 3 shouldn't be worth 16 billion, right? That's the way I'm looking at it.
Right. The risk is Tesla, I'm fairly confident they'll be around in 10 years. There's a chance Rivian isn't.
Won't be. That's right.
Yeah.
That's right. That is 100%. So like, you're right in that the downside risk for Rivian is you lose 100% of the money. But the upside risk is that, or the upside reward is that you might get 5 or 10 times returns on the money. Yeah. So, what's the probability of one versus the other is a big question. And these are the unknowns, obviously. These are the things we speculate on as investors, right? So NVIDIA earnings are out. Oh, should we keep going on the before we switch to NVIDIA, or?
No, I think we could switch to NVIDIA.
Okay. Let's look at NVIDIA numbers. Okay, so the big stuff is that 46 billion in revenue. Ooh, just a barely 1% beat. EPS of $1.04 versus 98 cents, so 6% beat on EPS. Those are not huge numbers. So let's see, what is the stock doing? Oh, it's dropped big. After hours.
And we don't have their guidance.
Oh, actually, not that big. It's roughly 3%. So, that's NVIDIA for you.
Yeah.
Despite a double beat, but the beat wasn't as much as people expected. So there you go.
Yeah, the crazy thing with NVIDIA to me is how much this company has grown and how the stock price has gone crazy, but it's still rated a B on Earnings Hub. Like, because the growth is kind of pacing with the price, right?
Right. Well, it's because of let's actually look at the earnings hub score real quick on NVIDIA. So price earnings ratio of 49 is honestly not that bad for a company that's growing so rapidly. It's trailing
Exactly.
12 months growth is approximately 72% of the revenue is growing in the trailing 12 months is 72% higher than it was the previous year, right? And EPS is grown 67% compared to the previous year. So both of those have grown substantially. But PE of 49 is high for a tech company, not that high for a company that's growing as fast as it is. Price sales ratio, again, 26 is high, but I mean, there's so many companies that have price sales ratios that are higher than that. So it, from a relative basis, it's not crazy out of whack. Now, on the revenue and EPS growth side, it just destroys most things. And a lot of people think that it might not be able to continue growing at even half of that rate because of the spending sort of having maxed out for AIs and AI chips and data centers. But it remains to be seen. It remains to be seen. So we don't know what's going to happen over the coming years if Meta, Google, Microsoft, these big spenders are going to start having or continue having these massive revenue increases and profit improvements as a result of their investments in AI, then maybe that investment could even increase. So who knows?
Yeah, to me, it feels like it's a space race and it won't stop until there's a clear winner. I don't know if that's what's actually going to happen or if there even will be a clear winner. But like, even if a company doesn't need the chips, they might just buy them so another company doesn't get them. Like it might be a defense play,
I don't know how smart that would be, because I feel like the creators of the chips, NVIDIA, will figure out a way to make more, right? Like
Maybe, but I would think they're limited based on like I'm assuming they work with ASML to make the chips.
Yeah, but okay. So let's look at because one of the things that just blows my mind with NVIDIA, and this is the part of the reason why like I never invested in them, is because I never thought that this kind of growth for a company that is already this mature is possible. So when ChatGPT came out, it came out in Q4 of 2023, right? Is it? Oh no,
No.
this is their quarter. It came out in Q4 of 2022.
Yeah.
For the next 2 quarters, NVIDIA's revenue hardly moved, right? So they barely went up a little bit over here. Like for 6 months, NVIDIA's revenue after ChatGPT came out did not grow significantly. It seemed like there was sort of like this delay before other companies realized, holy cow, this ChatGPT thing is going to change the world and we need to invest heavily in it. And then I thought it would be impossible for a $7 billion revenue company to grow in the way that it has. So one quarter from like NVIDIA went from 7 billion in revenue to 13 and a half billion in revenue, almost doubling just sequentially, not year over year. And to me, for such a mature company, I've never seen that before in a multi-billion-dollar company like that. And then they just kept it going. They went from 13 billion to 18, right? That's like an additional 5 billion of revenue, selling 5 billion more chips in one quarter. And then again, from 18 to 22, another 4 billion on top of the increase of 5 billion. So the pace of growth has been just something I've never seen before. And I don't think any company would be wise or smart in trying to gobble up NVIDIA's capacity as a defensive move, just because they just seem to add so much more capacity so fast that I've never seen anything like it before. So that would be the main reason.
Did you clock the next quarter's estimate? That seems like the biggest jump yet for their revenue.
Oh, and I suspect that has to do with, from 46 to 52 billion for next quarter.
Yeah.
And I suspect that has to do with China reopening.
Right. That makes sense.
So that all those H20 chips that they sort of took a hit on last quarter, I think they're gonna basically take that revenue back. So yeah, NVIDIA is in a pretty good shape to continue its growth, just maybe not at the same pace that it has been.
Right. So one thing I've been thinking about is you have, I think, 8 positions, not including cash. How do you think about diversifying? Because to you, is that diversified enough? Should you be diversifying more? Are you strategically not diversifying?
Yeah.
How do you think
So
about it?
you know what's funny is that if you talk to any financial planner or financial advisor, so and I'm not one of those.
No, you are
the,
not.
the first thing that they'll tell you is that diversification is the way to go. You don't want to lose money in the market, and it turns out that you could lose money in the market even being diversified, meaning like buying 500 different stocks as the S&P 500 will get you, for example. There are years where the S&P 500 has been down 25, 30%, right? So maybe even more. So diversification doesn't guarantee your money doesn't go down. But one of the things that does eliminate the possibility of is for your money to 5x or 10x in a very, very short period of time, and that sort of thing has not happened with the S&P, like in, let's say, a 3-year span or 5-year span. So it all depends what your goals are and if you're paying a lot of attention or not. If you're not paying attention and you're afraid, then maybe buying the S&P and being automatically diversified as a result of that, and even holding some cash besides the S&P is probably the way to go. My opinion, like that might be what I would do if I was very worried. But I came to a realization that in order for my investment to go up rapidly, I have to have concentrated bets. And like the ideal world, most billionaires, by the way, it's because they have one concentrated bet, the company that they built themselves. And oftentimes they'll make others millionaires because they own a piece of that one company and they own nothing else except for that. So concentration, ideally in just a single company, would be the way to go, except that's high risk. That's incredibly high risk because that company could also go bankrupt and you could lose all your money. So how do you balance the probability of like not losing all of your money but having this opportunity to sort of grow your money fairly rapidly? And the conclusion I came to is that for me, where most of my income was coming from somewhere else, I had a software company, having 2 or 3 investments at a time was sufficient diversification.
Just 2 or 3.
Just 2 or 3, because I had my main income and my company. That was most of my net worth was in that, and my income. And then 2 or 3 was high risk, but like not high risk to where like all 3 were not going to go bankrupt. Generally speaking, it would have been highly unlikely. I wasn't like betting on 3 companies that had 0 revenue or something.
Were the 2 or 3 in different industries, or was it all like very like
it was all tech? Yeah, because that's what I felt most comfortable with and knew the most. So
right.
I think it's important to invest in something that either you're a customer of their products, or the industry like very well. So in my case, I was a customer on the big bets that I was making. And then eventually I sold my company. So then, then it became sort of more about, okay, I don't want to lose, I don't want to lose this investment because I have no other income. And I'm pretty much unemployable, by the way, because I have a lot of opinions and no employer wants somebody who has as many opinions as I have. So
you would never hire you.
It's unlikely. But so, now I have this sort of portfolio of stocks that needs to be slightly more diversified. But because the number is much larger, I can still take a lot of risk because the cash amount is still a fairly substantial amount. And therefore, I would probably be comfortable with even going to 4 or 5 companies, but I have 8 or 9 right now. So I wouldn't hesitate to decreasing it to 4 or 5, but still having like 25-30% in cash or something.
And what about going the other way? Like, is there a max number where like you wouldn't want to have more than
I
these
feel like
number of
10,
positions?
like once you go above 10, it just becomes hard to keep track of all of them. And I like to listen to the earnings calls and like follow the CEO interviews, and all of that stuff takes time. For me, that's all I'm doing. I think 10 is probably my max number, maybe like 12. But and by the way, this is why like everybody in the community who asks me, what do you think of so and so, such and such stock? I'm like, it kind of looks good, but like I have no interest in buying more things, right? And then sometimes they'll ask me about something that looks good, but like I hate the company. Like UNH is a perfect example of that. I'm a customer of United Health, right? So I know firsthand that this company does not have satisfied customers, right? Like if you could not have your insurance, you would just not have it, right? Like it's now required by law for you to have it, and when you need it, it's not there. They don't pay for any of my doctor's visits, like basically because like I go to other doctors, I pay everything out of pocket, and I pay $2,000 a month to these guys. They're so bad, by the way, that their CEO got murdered, and people were sympathetic
People
to a
celebrate it.
murderer, right?
Yeah.
Like that's just like not the kind of company that I want to own, right? So I'm not sympathetic to a murderer. I'm just, like saying that that's the kind of customers that they have. So I don't care that they're cheap. I don't care that they might double, like I'm just not interested,
Right. And there's always going to be like a good opportunity. You can't invest in everything, right?
That's
like,
right.
It's just opportunity cost.
Right. So,
yeah. Got it. Awesome. Should we take some listener questions?
Let's do
Adrian,
it.
I don't know if what's on the docket there.
So we have I'm not sure how to say this person's name, but he said, do you see a market correction of 10 to 20% coming soon within the next 4 months, particularly in the technology sector?
So market corrections are like nearly impossible to predict, in my opinion. Like nobody could have predicted the tariff correction that occurred, and like we took a easily 20-30% hit, and some names took a 40-50-60% hit in the short term, and then they bounced back. No one predicted the sort of like hit, and then no one predicted the bounce back either. But sometimes when those things happen, you just sort of are prepared for it because you have a decent amount of cash, and then you can deploy more cash if that type of thing happens and opportunities present themselves. And if it doesn't happen, a great example of that would be like the housing market from 2003, 4, when people were like, wait a second, the housing prices are going up way faster than they ever have before. They're like in some markets like Arizona, they started going up like 50% year over year, like between 2004, 2005, 2000. And then people were like, a correction is about to happen. But it didn't happen in 2005. It didn't happen in 2006. In fact, it just continued like 50% year over year. The correction didn't even happen until end of 2007. So it took like roughly 3-4 years past the time when people were like starting to talk about a correction happening. And then when the correction did happen, it just went way overboard the other direction. So these things are kind of unpredictable, in my opinion. I think my view has been like ignore the macro, buy things that are really good, great companies at good or great prices. And if you sort of take that approach, then and always keep plenty of cash around. If you take that approach, then well, I should say, when I take that approach, I have had good luck, and good opportunities have come about.
Yeah, I feel like if you think the market's going to crash, it won't, and if you don't think the market's going to crash, it will. So,
Right.
and then even if you think like the market's always finds a way to humble you.
That's
and
right.
prove you wrong.
That's right.
Well, I think this has been a great episode. I could already hear everyone rating this podcast 5 stars and subscribing on YouTube and liking on wherever. I don't know, liking on X. Got to get all the platforms in there.
That's funny.
You can find both of our portfolios in the description on Savvy Trader. Check out
Very
Earnings
cool.
Hub, the greatest earnings calendar ever. My opinion, maybe a
this
fact.
This is the
Not
ad
investment
section.
advice.
This is sponsored by Earnings Hub. Ultimately, it's all about the earnings, right?
It's all about the earnings.
Yeah, very cool. Well, thanks, Dustin. Thanks, Adrian. And let's wrap it up. Appreciate it, guys.
Thanks, guys.